Hello, everybody. Welcome to the Fundamental Analysis webinar. My name is Troy. I'll be presenting for AvaTrade today. As we get going, let's do a quick systems check. Just type OK. Hello, everybody. Welcome to the Fundamental Analysis webinar. My name is Troy. I'll be presenting for AvaTrade today. As we get going, let's do a quick systems check. Just type OK in your chat box if you're hearing me clearly and seeing my screen all right. All right. Looks like we're up and running fine. Thank you very much for the responses. Hello, Natalie. Welcome back. Okay, so as we get going, keep in mind, I think we all understand this, but it's formality we have to go over. All investments have risk. No one trade is guaranteed to profit. That's why you should probably have some kind of risk management plan in mind as you go into placing trades. Certainly, each and every trade you make has a good potential for profit, and that's what trading is all about, is potential. And then it's up to us or up to you to find proper entry points and exit points to hopefully bring a profit. And that's from an educational perspective, what we're going over in the webinar today. And it's not to be taken as financial advisement, but what we're looking to do is increase your knowledge base about different ideas in terms of fundamental analysis, even technical analysis, and strategy, so that hopefully you improve your win percentage or your payout at the end of each day, each week, etc. So you're moving forward in a profitable manner is the goal. Obviously, the majority of traders who go into things without a plan, you slowly lose your funds to the spreads and overnight interest. So it's best typically to have a plan, to manage your risk in a way that makes sense for your balance size, for your goals in terms of profit and your tolerance for risk. And we go over many of those concepts within the webinar, talking about trade size exposure, how to make sure you understand what you're getting into. And as we go over the AvaTrade platform and the AvaTrade Go mobile app, it makes it very easy to understand what your exposure is, what your potential profit is, etc. And also there's a special feature on that platform and that mobile app that trades on top of the MT4 and MT5 accounts through the AvaTrade and the AvaTrade Go mobile app. You'll see AvaProtect, which is a risk management feature that you can put onto trades involving gold, silver, or FX pairings for a small fee to cover any and all risk for a defined time period. So it's a unique way to manage risk. It's something that I think could work in different situations as part of a risk management plan. And you might think the same as you take a look at the feature. What is fundamental analysis? Real quick, I know we have a mix of new traders and also experienced traders that come to the webinars. It's no problem. We're going to have information for both levels, for all levels of traders here in just a moment as we get on the live charts. But real quick, what is fundamental analysis? It is basically the news. It is what's going on in the world, maybe economic announcements, which we refer to as regular economic events. Some of those are occurring today. We know the exact topic, the exact time of the announcement, etc. And there are other types of fundamental news that we might call extraordinary economic events, which could be something like the stimulus package that was passed yesterday in the US. We all expected that to happen. There were expected results that we talked about on Tuesday, with gold responding predictably, jumping up, oil responding predictably, going up, the indices responding predictably, going up. And so that was related to some extraordinary news that actually uniquely we were able to predict the extraordinary news in advance because it was pretty obvious the timing of it. It was more along the lines of the regular economic events, even though it was an extraordinary event. We knew the timing of it pretty much, and the end result even that it was going to pass. And so we'll look at what we talked about Tuesday, how that there's a trade we simulated with AvaProtect with gold. We'll take a look at that and see how that went. So as we get on the charts then today, we'll take a look at the current news situation involving the fundamental news, which is strongly related to what we talked about Tuesday. So we'll look at that now. And if you have any questions as we go along, please feel free to ask at any time. Real quick, what are the headlines? $1.9 trillion COVID relief bill passes. Okay, it won final approval in the House. I don't know if Biden signed it yet or not, but he certainly will if he didn't. And so, yeah, it looks like it was signed. We see it being held up there. So officially everything was passed there. So the markets like that. What do you think happens to the indices and stocks when they get 2 trillion injected, nearly $2 trillion injected into the economy, and still with very low interest rates in the US and around the world for that matter? Indices responded in kind, climbing to new highs. And we'll take a look at that in a moment on the charts. European shares hit new one-year peak ahead of European Central Bank decision. This is coming today. Hasn't occurred yet. Okay. Obviously, there's anticipation of good news because European shares are also hitting new highs, partially because of the US stimulus package. It's such a global economy anymore. And we talked about this Tuesday that it wouldn't just be US indices and stocks rising in response to the 1.9 trillion stimulus in the US. We anticipated indices and stocks around the world would probably respond positively. And so that's already happened, including with European shares. And now there's another fundamental news story. This is more of the standard kind, not the extraordinary type of fundamental news. This one, we know exactly when the schedule is that the announcements will be, and there will be a decision out of the European Central Bank. There's optimism about what they'll have to say in terms of propping up the economy, doing things to make the economy be strong, with hopefully without too much in the way of inflation fears kicking in. By the way, that's why it was expected gold would rise with at least temporarily with the passing of that stimulus yesterday, because indeed it does bring about some fears of inflation, and it also weakens the USD. So if the USD is weakening, gold tends to rise with a weakening USD. And so as we look, not many announcements today, some very small ones, and we can see here's the European Central Bank marginal lending facility, European Central Bank rate decision coming up later today, okay, in maybe a few hours' time. And then we also have the European Central Bank press conference. That's really the big one, the press conference at 8:30 a.m. New York time. Add 5 hours for UK time, GMT time. Okay, so not that long from now, press conference coming. Okay, so that would be 1:30 p.m. GMT time. Okay, UK time, European Central Bank conference, and then also some big jobs numbers being released later today out of the US. So some fundamental news still to come. Already we have the optimism though that is kicked in with the current fundamental news situation, specifically with the stimulus out of the US. Now, I mentioned our web trader platform and AvaTrade Go mobile app. The web trader is accessed by logging in here. If you're an older client with AvaTrade from before the web trader was built, then when you log in from here, you might only see your client area. If that's the case, ask your account manager or our support team to add the web trader to your login so that when you log in, you see this platform, the web trader platform, which is a very nice user-friendly platform that has some advanced features that I'll show you real quick. Trading platforms, if you go to AvaTrade Go, trading platforms, AvaTrade Go, that's where our mobile app can be downloaded. It'll take you to Google Play or the Apple App Store to download onto your mobile device. It trades on top of the MT4 and MT5 accounts. It's just a user interface with more advanced features that I will show you here on our web trader platform. Okay, they're on both AvaTrade Go and web trader in terms of some of these advanced features. So real quick, we'll take a look at a trade we simulated on Tuesday. Okay, gold, you see it's in profit of 160. We put AvaProtect on this one, by the way. So when gold dropped further, we weren't worried about the stop loss being hit. We didn't have to set a stop loss. You see, we put AvaProtect. The cost of AvaProtect, you can see if I go to, let me go to this other page here, the cost of AvaProtect was $107.92 on this particular trade. It's based on the number of ounces in the trade, the lot size, okay, and the time frame that it's protected. We chose 2 days protection. You see the remaining protection is 3 hours and 50 minutes. So if gold had crashed the wrong way, any negative floating when the trade closed would have been added to the account. We're already in profit beyond the cost of the premium. So I could close right now at $155, and that would give me, minus the premium cost, about $40 or $50 profit, right? Somewhere in that range. Or I can hang on and let it go. Maybe I think gold will go higher. That's up to me. But my risk was capped at the cost of the premium for the 2 days. Why did we anticipate gold would go up into a profit level where I can then close and take my profit? Okay, I take an overall profit on the move larger than the cost of the premium. So now my balance jumped up into 1700 plus, where I was at 1650 or so before. Okay, and my risk was capped. Why did we expect gold would go up with the signing of the stimulus deal? I already alluded to it already. This is perfect fundamental analysis in action. What happens when there's large stimulus passed out? Fears of inflation, right? And what is the number one safe haven when people have inflation fears? What do they tend to buy into? Gold, correct. A number of you are typing gold. And lately, cryptocurrencies, maybe, right? I mean, look what happened with Bitcoin as the USD was weakening. So the maybe the safe haven that's also nationless, like gold, also decentralized, like gold, cryptocurrencies, and specifically Bitcoin, I guess, is the most popular one that people know the name of and invest in. But we've seen gold rise as expected in that simulated move from Tuesday that we went through. Now, how do you add AvaProtect to a trade? You bring up an instrument that it's offered on, any FX pairing or gold or silver. Okay, I always use gold as an example because I know it's a very popular instrument that traders like to trade on. And there it is. If you check the box, you've got AvaProtect on the trade, and you can protect it for an hour, for 3 hours, 6 hours, 1 day, 2 days. Okay, and the length of the protection, you see now it's only $51. 2 days ago when I did the protection, it cost me $100 plus for 2 days protection. It's because I had a larger trade size. There's 10 ounces now. Now it's $103, right? So the larger the value of the position, and then the larger the potential profit, right? And the larger the risk, the more the protection costs. But it's all relative, right? It didn't take much movement for me to make more than the premium cost in profit. And you saw that simulated a moment ago. And so you can use AvaProtect to protect for defined time periods. And if you have a losing trade at the end of that protection, whatever the negative floating is, it gets added to your account as a payment from the protection. So very cool feature, only available to add on to your trades if you open it through the web trader or through AvaTrade Go. Okay, and you also will see as you put your stop loss and take profit, it's calculating your exposure. I should have showed you that. Let me show you real quick. If I put stop loss price, let's say I think it won't drop below 1700, so I say 1690. Okay, there's my risk, possible loss, $227. Okay, a lot more than what my AvaProtect was costing me, a double the risk compared to the cost of the protection. So you can know before you buy or sell your exact risk for your trade size to the price of your stop loss, and the same for your take profit. Okay, you can put your take profit price and know what your potential profit is based on the price that you put for your take profit. Okay, and it's converted to your account currency. Okay, good question, Ibrar. Ibrar's asking, what's the difference between a stop loss and the AvaProtect? If I don't have AvaProtect and the movement drops down and hits my stop loss, The trade is closed automatically at that amount of loss, protecting you from further loss, right? But it closes automatically. Now, if it goes back the right direction, you already took the loss. Unless you reopen another trade, you're not gaining as it goes back up. With AvaProtect, if you, in lieu of a stop loss, if you use AvaProtect, it could have dropped to that stop loss price or even further during the time of your protection and then gone back up into profit, like you saw my example, the one I just closed. It initially went the wrong way, but it never hit a stop loss because I didn't put one, because I had AvaProtect. I didn't feel I needed a stop loss. So it went down and then went back up into profit. And it didn't matter. I could hang on to it no matter how far it went the wrong way without any further risk. I didn't have to move my stop loss further away to hang on to the trade, which would expose me to more loss. I could, for a flat cost of the premium, that's all I was going to lose, no matter how far it went the wrong way during my protection. So AvaProtect gives you more flexibility to hang on to a trade that might be going further than you would be willing to risk in the wrong direction, and wait it out to see if it'll go the right way. Whereas your stop loss hits, it's done, trade closes. Okay, good question. All right, so this platform also, before we look at the charts, offers you fundamental news. Since this is a fundamental analysis webinar, on all live accounts, Trading Central is completely active. It's a premium service that usually costs money. We offer it free on all live accounts. You get, in addition to live signals with the analyst views, okay, live signals on FX, on the dollar index, on FX pairings, on cryptocurrencies, okay, live signals with the technical analysis done for you, showing the expected breakout move at different price levels, shows you support and resistance. Everything's done for you with the technical analysis. And these signals come in live all day long. Okay, so that's there for you for free. And you also have Market Buzz, which is the fundamental news. And whatever's trending the most are the bigger bubbles. So Apple right now is very popular. It's the biggest bubble here. Apple, Pfizer, Tesla, okay, Microsoft, for obvious reasons. The tech stocks did great yesterday. So there's a lot of buzz about them in articles. Apple, Amazon, Facebook. So if we want to say, okay, what's going on fundamentally with Apple? Click on the bubble. It pulls up the articles that most recently came out in descending order of time. And so Apple starts iPhone 12 assembly. That came out 1 hour ago. I could click on it, read the article. You can quickly find, is this news that's good for Apple or not? Maybe, wow, it's a breaking headline that just came out in the last hour and it's really good news for Apple, maybe. So then you decide, let me go check out Apple on the charts. Maybe there's an entry point I like when the US market opens, that if it dips down, I want to get in, or if it goes up, I want to sell, depending on what the article said. Okay. So Saad, good question. We're looking for fundamental news right here. You're asking, where do you get fundamental signals? It's not really fundamental signals as much as fundamental information. The signals are more the technical analysis, where it tells you exact price levels, which we looked at in the prior feature here. Okay, so very informative information, time saving to find articles about the most trending instruments using that Market Buzz feature. Okay, so let's then take a look at the live charts. And so we understand the bigger picture today. Fear is down a bit, sentiment is up, the wind is blowing up, so to speak, on the equities, on the indices. They've been reaching new highs, and maybe we look for opportunities that align with that optimism, but only if the technical analysis is the right entry point, right? So let's look at maybe crude oil. What happens with crude oil when there's optimism about the environment? It goes up. And look at this opportunistic dip. So we see on the 5-minute candles, crude oil went flying up, right? Breaking recent highs. I mean, this is US crude breaking 65.5 not that long ago. And here it just pulled back down, right? So let's look at 1-hour candles. And we say, okay, this price level down here is an old support level. Okay, you see resistance, resistance, it broke through and became support right here. Resistance, resistance, breaks through, becomes support, support, support. When it went below, it became resistance, resistance. When it went above, it becomes support, support. So this price level around 64.7 seems to be an important price level of support and resistance. And right now, the price of oil is above that. It's above that and bouncing. You see it bouncing. And you have an opportunistic pullback. So if I'm scalping oil and I want to say I'm going with the fundamental news is OPEC is still holding back on increasing production by large amounts. So having production kind of tampered down allows for the price to stay up a little easier. And 2 trillion almost in stimulus out of the US and optimism about the European Central Bank announcements today tends to create economic optimism tends to create bullishness on oil. Okay, with that said, there's no guarantee oil will go up from here. Could break this support level and drop. So we obviously want to manage risk in a way that makes sense. But the technical analysis looks nice. It's a support level / resistance level from a while back on the 1 hour candles. And it's holding right above that price. And so a market move like this to buy on crude oil for a trade size that makes sense for your balance, for your risk tolerance, and for your profit goals. And by the way, if you open the trade through the web trader, it'll give you all of that breakdown of how much you're risking to your stop loss, potential profit to your take profit, how much margin is required if you use the web trader or AvaTrade Go to open the trade. And then I put my stop loss here. That's a trick, by the way. If you activate one-click trading, you can left-click and drag off the entry price, and it'll create a stop loss line. And you could do the same for your take profit. And now my take profit, if I'm scalping, could be at today's high that it already hit. Right there. Just before that high, I go back to 5-minute candles, and I say, okay, my support line is here that I drew from the 1 hour candles. This is the general price area of support. I put my stop loss below that support level. Maybe on the 15-minute candles, we'll see the stop loss. 30-minute and 1 hour. You know what? My stop loss is right below this line. Let me drag this line out of the way. Oh, my bad. Stop loss is here. Stop loss is this line here. My entry price is the green dotted line. I'm below this support level price here. And I think I want to cheat it down just a little further. So I'm below this wick right here that it tested not that long ago. So I'm below that price level of support, which is this red line up here from this old resistance and support. You see, you get a better view on the 1 hour candles in this case. Now I go back and look at it closer on the 5-minute, and I know my stop loss is below this line of support from the 1 hour candle support level, and my take profit is before this resistance level, which was the high point it hit today. If it just hit there today, unless the fundamental news changed, why couldn't it have the potential to go back to this high today, right? That's the idea of the fundamental news being on our side. And we see oil is trying to bounce up. So this is a great move if you like to align fundamental news with your technical analysis entry point, because we have a nice opportunistic entry point from just above a support level after a large pullback, and we have a nice clear high point that was reached just a few hours ago. Any questions or comments on this example of aligning the fundamental news on our side, bullishness in the economy, idea that tends to drive oil price up? We already have confirmation of a spike in oil price in response to the news of the stimulus passing. And so fundamentals are on our side here, the technicals as well. And if I'm scalping, I could close this already, right? I'm already in profit. I'm up $8 US. And if I took a 1 lot trade instead of 0.1, I'd be up almost $80 already. And boom, I could close it. This is scalping, in and out, in and out. It's a great way to trade, right? You also could be more patient. which is also a great way to trade. Depends on your style. I think waiting this out to see if it would hit this resistance could make sense, but it doesn't mean you couldn't have already closed with your profit. Taking advantage of that support level, many times, even if a support level is going to be broken, which it could break, even if it's going to be, because the support level's there, it tends to bounce first, even if it's going to break it. And we're seeing that bounce now. So that's where sometimes scalpers have an advantage. Getting in and out quick, fundamentals are on my side, the support level's on my side, wait for that almost assured bounce that many times you see. And once it bounces, you close and take the profit. You might win 10 or 12 before you lose one. In that case, if you're taking profit so quick, you're probably going to lose more the one time you lose than you win on any individual win. But if you're losing twice as much as you're winning, but you win 3 or 4 times as often as you lose, that's still an overall profit. So there are different strategies with risk management. I showed you one strategy here where we're risking about half the amount that our potential profit is, and we're being more patient with the movement in this example. Okay, let's look at gold. Okay, so what's happening with gold? Very similar. You see it went up, right? Gold went up on the 5-minute candles, just like the indices did. And then gold dropped, just like the indices did. Why did that happen? Why did gold go up when the indices went up? Why did gold pull back down when the indices pulled back down? Think about the relationship of both of those instruments, the major indices and gold, how both of them relate to the strength of the US dollar. As US dollar weakens, these instruments being paired against the USD have an advantage to be able to rise easier. Also, if the US dollar is weakening, it's because people are selling out of the US dollar. What do they buy? If you're selling out of the US dollar because stimulus was passed and you say, wow, they're handing out money for free, I don't like the USD right now, I think it'll weaken, so what do I buy into? Well, naturally, you're buying into something other than the USD, gold, stocks, indices, and up go stocks and gold compared to the USD. That's what's happened. So the same reason when there's a pullback, people say, oh, US dollar weakened, I like the price now. They buy back into the US dollar, selling their stocks temporarily anyway, selling gold. And so gold and the stocks drop as the US dollar re-strengthens. It's normal relationship, okay? Now, that momentum still exists in terms of bullishness because of stimulus. That didn't go away. So if you like the price level, you could say, wow, I think maybe gold could climb further with inflation fears. But a word of caution on that. There, yeah, on the web trader platform, I mean, we just went over, and if you missed the beginning of the webinar, all of our webinars are recorded. So by tomorrow, certainly by Monday, this session will be uploaded on our YouTube channel. So you can check out in the English webinar section, you'll find this webinar. We went over the web trader and the location in the feature called Trading Central, which is located in our web trader platform that offers you signals, both technical analysis signals and fundamental news information. Okay, so we do give an indication every day within our platform of all kinds of technicals and fundamentals. Okay, if you're asking in general, do we give an indication whether there's market optimism or pessimism? I wouldn't say in a general sense, no. But you could quickly get that idea from the headlines. We took 5 minutes, we looked at 3 different headlines, and we knew, oh, wow, market optimism. The headline said markets reach new highs. The headline said optimism about stimulus, etc. We could see it. We knew there was optimism. The wind was blowing up. And we anticipated that actually earlier in the week. If you look at Tuesday's webinar, that we'd see a spike in gold and a spike in the stocks, the equities, the indices, etc., and oil for that matter. Okay, so gold, I was starting to say a little bit of caution with thinking gold has to keep rising because of inflation fears. One of those headlines, if you remember that we looked at, let's go back and look. Okay, was here. If you read into some of these articles that we looked at, it tells you that inflation fears actually have weakened. So even though the stimulus came out, some of what the central banks have talked about has kind of weakened the fear that there should be this huge fear of hyperinflation with the USD or with the euro for that matter. For the time being, anyways, the inflation fears have cooled off. So it may be a little bit tricky to think gold has to rise just because the US dollar has weakened. It already rose, right? In anticipation of the stimulus, look what happened since Monday. Okay, gold already went up from 16.6 or 1680 to 1735. We're talking over $50 rise per ounce already occurred. We talked about it Tuesday. I hope some of you took advantage of it. Now that that rise occurred, perhaps the positive economic outlook in the US pushes gold back down, meaning the US dollar could strengthen with good economic numbers coming out of the US. So that's something to keep in mind. You actually could say, listen, the price is cooked in on gold. Gold went up already in response to the stimulus. We see it over $50 rise. Okay. And so you could take a limited shot to sell on gold, right? You could sell on gold and say, listen, it could rise, so I'll limit my risk to this resistance level. You see resistance, it started to drop at that exact price right here. You see the resistance level? For those of you that only believe in fundamental analysis trading, look at the technicals on this movement. This was the resistance. Look at the wick right here, resistance at 1740. Exactly. Look where it dropped after this rush up. It rushed up all week this week, and look where it dropped from. Exactly 1740, exactly where the old resistance was. So the fundamentals determined the direction, in this case, up this week on gold. The technicals determined the stop point of that direction. Okay? And so that's the relationship between fundamental analysis and technical analysis. Fundamental analysis helps you determine the direction you prefer. The technical analysis helps you determine entry point and exit point that you prefer. Okay, and this point, perfect exit point if you were selling on gold. And you saw I closed the simulated trade from Tuesday. Maybe that's why, right? Why close it where I did? It was in profit overall. I made back the cost of AvaProtect plus profit, and it's dropping from this resistance. So perfect time to potentially sell on gold, technically speaking. Fundamentally, there's reason why gold could climb more, but you could look and say, maybe I think the price is cooked in, meaning it already rose in response to the fundamentals, which it certainly has. The question is, do you think it could rise more? It's easy to take a shot that gold might pull back now with very little risk. I don't have to risk much. It very easily could break the resistance. Fine, I take a small loss. But the possibility that gold could pull back to the last support level down here, the old resistance level, is also there. So for very little risk, I'm going after about double the potential profit, equal to double the potential profit, depending on your exact entry and exit, with that resistance level on my side and an opportunistic price point to sell from after a large rise. Okay. And that kind of hedges my crude oil position where I'm expecting crude oil to rise with a weakening USD. If the USD strengthens, I'm kind of hedged because that would pull gold back down. And we're in a sell position here on gold. Limited risk on both of those trades with larger potential profit. If we're right on one, we profit. We only need to be right on one of them and we profit overall, depending on how you set up the trade sizes, right? And that can be your strategy. Set up the trade sizes so the potential profit and risk make it so if you win 1 out of 2, you profit. Okay. All right, let's take a look at maybe US 500. Look at the bullishness. Look at the climb. That's in response to easy money, free money being handed out. Okay. The all-time high resistance is up here. Okay. So it's got a ways to go before it reaches the all-time high. I believe there's good potential that it will challenge the all-time high. With that said, it doesn't mean this is the entry point you want, right? You could be patient on your entry point. So knowing the all-time high is up here, you could then go back and say, okay, let me look for a preferable entry point. You might put a pending order and say, if the market pulls down, maybe I buy from this support level down here, right? This was old resistance, resistance, resistance. Once it went above, it became support, support. So if this drops down near this support level, maybe you say, then I'll buy. That's if you're bullish on this instrument based on the fundamentals. If you want to sell, by all means sell, right? We took a shot at selling on gold because there was a nice resistance level. This particular movement is not at a nice resistance level yet. So it's a little bit different. And so if this drops to a support level, you could have a pending buy limit, a buy limit pending order ready to buy from just above that support. Let's say at 39.13. Okay. So how would I do that? If that's what I decided I wanted to do, switch to pending order, go to buy limit. Buy limit buys from a lower point than the current price, and I can put 39.13 or whatever price I think I like. You don't have to pick the price I'm suggesting. And my stop loss could be just below that support level, or I could be patient and put it below two support levels down here, 38.87 maybe. Gets me below two support levels, 38.87. So I don't have to be perfect with my entry point. I could stick with it still. Okay, there's my pending order. If the price drops to this support level, I'm in on a buy. As long as it doesn't break that support and the next support level here, then I stay in it and be patient for it to go up, even if it initially goes in the negative. If it breaks two support levels, then I assume, wow, bad news must have came. The fundamental news must have changed if it breaks both support levels. So then I get out with a small risk. Where's my take profit? Probably I need to go to 4-hour candles, 1-day candles, and say, okay, my take profit is up at this just before the all-time high at this resistance. So around 39, let's say 50 or 39.55. So I can go back to this pending order, modify, and put my take profit around 39.55, modify. Okay, there's my take profit right at the all-time high. And maybe I want to slide it down just a hair. So it's just before the all-time high. Okay, so in this setup, my risk is if I get in at the entry point I want, right? If the movement drops to my entry price here on this support level, which finds support right here. Here's the old resistance. Now it's above that. So as it drops, it should find support right above this price here. And if it pulls back to my entry price, then I enter here and my risk is to here, this distance. My potential profit is much greater to the old all-time high right up here. Okay, and I'm getting out, in fact, before the all-time high. It doesn't even need to break it for me to reach my take profit. Just needs to get near the all-time high. And I'm making more than I'm risking. Okay, I'm risking from there to there. Potential profit is from my entry price here on my buy limit pending order up to here. Ilyas, good question. Because this webinar is about fundamental ideas, fundamental principles with trading, we just looked at, I don't know, maybe you joined late, but we looked at the fact that the stimulus package passed, 1.9 trillion, and the response immediately was the markets went to all-time highs for some of these indices. So because they've pulled back from those highs, okay, because they've pulled back from those highs, and you see it's trying to keep climbing, you could see the markets continue to climb with that fundamental news. 1.9 trillion in stimulus. Boy, if that doesn't help the markets reach the all-time high, I don't know what will, right? Now, with that said, we could be wrong, right? We could be wrong. So that's why you still risk manage. You put your risk management in there. You're not guaranteed to be right, but the fundamental news is on your side in that direction. That's the idea. And that many times will increase your win percentage. And you see again, crude oil going the right direction. We're up even more. Why did we think this would bounce? Why do I scalp a profit of $20 on a small trade just like that? How did that bounce the right way? Because we used a technical analysis entry point above a support level in a situation where the fundamental news says oil should probably go back up. Okay, why didn't we take a market buy then on the S&P 500? Because it's still at a high point. It didn't pull back yet. Oil had pulled back. We said, wow, look at that opportunistic pullback in a market that we expect to climb. So boom, we got in, easy profit. This one, we put a pending order because it's up at the high of the day almost still. We would like to see it pull back before buying. If you think it will go up, it's nicer to get a lower entry point rather than get in at that high point of the day. Okay, this could just keep climbing, right? When you put a pending order, sometimes it doesn't hit your price. Oh, it's okay, Ilyas. I don't mind if you're late. No problem. Uh, you're asking if the stop loss is at a lower value, a bit low, isn't it? You're saying it depends on your patience level and your intention. If the stop loss is intended for a scalp, a very short, small movement into profit, you close it right away, then your stop loss a lot of times can be closer. But if you're going to be more patient with the movement and wait for it to reach maybe an all-time high, then your stop loss tends to be more patient if it's a little further away. You avoid false signals, false spikes down that would trigger your stop loss too soon. Okay. All right. So and by the way, Ilyas, this is a pending order. So we didn't open it yet. The stop loss price being here is not all the way from the current price. It's from our preferred entry down here. Okay. And if you look at the take profit, if you enter at our pending order price, if it buys from here, your take profit is a much larger potential profit than what you're risking to your stop loss. Okay, good questions. And that's for everybody. If you show up late, no problem. If you missed something, ask questions. Other people benefit from a repeat of the explanation as well many times. Okay, I think this is a good place to stop. We've simulated gold dropping off the resistance level. I just scalped a profit there, right? We simulated oil bouncing up off the support level with the fundamental news. We simulated a profit there. Doesn't always work that we always make profit in the simulations, but you see the fundamental news and the technical analysis working, at least in the short term, in your favor. And by the way, you might think these small profits, what good are they? You know, you only need to gain 1% profit a day on your account to average 20% profit a month. 20 trading days typically a month. Unless you're trading cryptos, then it's more trading days. And if you can gain 1% a day, 20% a month, you more than double your balance in less than 6 months. In 6 months, to double a balance would be great. There's no guarantee of that, right? But a target of 1% profit on average per day actually has huge ramifications in potential profit. So keep that in mind. You don't need to go after huge, huge profits on each move. You can scalp these small profits, taking advantage of price levels, support and resistance, and going with the fundamental news, and take your profits before the fundamental news changes. That's the thing about short-term trading. You get in and out before the news has a chance to change. We all know the fundamental news can change in one headline. Okay. All right, everybody. Good luck with your trading. I expect continued momentum in many of these instruments that we looked at, including other instruments with the currencies. I think the potential profits are there today. It could be very good. Just manage your risk in a way that makes sense. And until next time, good luck with your trading. We'll be back Tuesday for the evening session at 6 p.m. GMT. All right, bye, everybody.